Sou da favela, tô aqui, sabotagem. Tem certos lugares, ligeiro, criminalidade. Eu tô de pé, na risco o pescoço. Dá desgosto, porque aqui não tem socorro. É impressionante, é tipo Pirituba na Mirante. Não sou chinês, às vezes fumei, sou fumante. Um câncer da sul, humildade é minha lei. Aqui, sabotagem não é viagem, o que sei. Então vai, faz, tem que Jesus.
What is going on, crypto peeps? Good to see you guys again. I haven't done a video in a couple days. I was busy with work in Sao Paulo. Currently I'm in Rio on Copacabana. Here's a little snapshot of what it looks like behind me. Hopefully you guys can hear me all right. All right. So in terms of the market, you know, since I've been out here in Brazil, it's been pretty stagnant. I mean, we did see, you know, that significant drop from, not significant, but you know, significant enough to register on everyone's radar. So we saw a drop from the mid 9Ks down to below 8K, and then a bounce back up, as you see here. I have pre-drawn somewhat of a double bottom pattern here because we haven't yet retested this downtrend resistance line, this green that you see here. So I'm expecting, just because of how weak the volume has been, just because there aren't many bullish indicators, and we're looking at the 4-hour chart here, you'll see that, you know, the MACD just converged. The RSI looks like it's starting to climb back up with this little rally here, but yet we haven't yet touched this downtrend resistance line, so we don't know how we're going to react to that. This candle closes in 3 hours according to the timer here on the right, so we'll see how it reacts to this. I'm predicting, not so much a prediction, but I'm expecting, I guess, I'm expecting it for it to hit this downtrend resistance line, get rejected, come back down, and this act as the major support line right now, as confirmed by, you know, the recent drop, as well as this was a support line back in early February. So I'm not yet expecting Bitcoin to drop below this, but you know, it's anyone's guess. We'll see. But the reason that we have these resistance and support lines is so that we can continue tracking the trends of the market. I've said this in the Discord chat earlier, and I've said it on a bunch of YouTube comments. I've even said it on a video before. I don't understand really the point of making these wild proclamations about, you know, a $3,000 Bitcoin or $50,000 Bitcoin. We have support and resistance lines for a reason, and it's to help guide us as the market is moving. So that's just my take on it. You might have a different strategy, whatever works for you. But I don't really understand how, you know, calling out a $2,000 Bitcoin is going to help you, because obviously you're not going to sit there, or you shouldn't sit there and watch your portfolio dwindle along the way. I mean, before we get from, you know, 8K to 2K, obviously you should have an exit strategy and a max loss, and then a point for re-entry, etc. So anyway, this right here is what I call the new resistance, just based on you know, where we've hit a wall recently in March, and we haven't been able to get over this hump. So that's around 98.60, and then this major resistance level is the hump that we weren't able to get above around March 4th and 5th. So that currently is our major resistance level. Our long shot resistance level is at around 11,600. But for now, the small goal that we should focus on is trying to break this downtrend resistance, and let's see what happens off of there. In terms of the overall market, we're currently sitting at around 340 billion. No surprise there. Bitcoin dominance is almost a couple percentage points up since it was a few weeks ago at almost 43%. That's not really surprising. Again, we're not really seeing a lot of volume coming into the market. So what is surprising is that some alts were actually rising against Bitcoin while it was dropping, and they weren't following Bitcoin's suit anymore. So we saw that with DGD, we saw that with Ncash, we saw that with BNB, and a few other coins as well. What's surprising is that the blue chip coins, so like the Ethereum, Litecoin, Bitcoin Cash, and Ripple haven't, you know, they've been losing steam. Nothing to me is more surprising than Ethereum. If you remember, towards the beginning of the year, Ethereum was basically just a tenth of Bitcoin. So Bitcoin, for instance, was 8,500. Ethereum was 850. If Bitcoin was 10,000, Ethereum was 1,000. So you could just, go back a decimal point, and that's what Ethereum's price, or around Ethereum's price, would be. However, it has lost so much steam that doesn't hold true anymore. And you can see, like, in the last 7 days, Bitcoin dropping 4.5% and Ethereum dropping almost 11%. Another thing I wanted to discuss before I end the video is this article right here on TechCrunch that's titled "A Gentle Critique of the New Coinbase Index Fund." And I really do appreciate Mr. Martin Green. I do appreciate the attempt at not spreading FUD. This is how all coin-based titles should be worded. And I think the crypto community would thank you for this. Anyway, I really like this article. I was trying to find something to refute in here, but Mr. Martin Green makes some really good points. First, he outlines what are the benefits of index funds, and specifically a crypto index fund. But the benefits are, some of the benefits are low fees for easy access to the broad diversified market, low turnover, so high tax efficiency, long-term compounding with fewer stock selection and market timing mistakes. And he basically goes on to summarize that index funds do really well in adopting or acquiring large amount of users from large number of investors from the mainstream, and that will be the case in this digital asset-based fund. Here are some of his criticisms with the Coinbase Index Fund. He says, premature launch. Coinbase would be wise to wait until they launch 10 major assets to launch the index fund. Otherwise, people will be buying into 60% Bitcoin, etc., etc. And that is a really good point. It might seem premature, but to play devil's advocate, if you are going to launch this, especially in a market that is in its infancy, you want to do it early rather than when it's too late, or rather than when things are starting to progress at a point where you can't make mistakes. So I agree with this wholeheartedly, but I could see why Coinbase would want to do this early on to work out the kinks first before the market is in a more mature state and they can't afford certain mistakes. Rebalance frequency, it's once per year on January 1st. This is something that I didn't know. I thought that they actually would rebalance more often. And rebalance is just if you look on the Coinbase fund here, it shows you the allocation based on the coins that are listed on Coinbase. So what he's saying is that it only rebalances once a year on New Year's, basically. Supply fixed in the index. This has more to do, obviously, with the fact that coin supplies are mostly fixed. That is one of the characteristics of coins. Obviously, you do have a set number of shares when we're talking about stocks, but they're not fixed. Companies buy back stock all the time, or issue more stock, or there are stock splits. So it's not as stagnant or as static as coins are in the equity markets. Now, those were just some of the flaws. In terms of larger flaws, he's saying the digital asset space is not mature enough to just use market cap weightings. I kind of agree with this, but what else are you going to use as opposed to market cap? He's saying that market capitalization is currently easily manipulated, and therefore the Coinbase index will overweight the most manipulated, the most overvalued, and the least liquid assets. I don't know. Are you going to go off of price? Maybe he's saying that we should, be a price, that the Coinbase Index Fund should be a price-based, or the Coinbase Index should be a price-based index. I guess you can go either way. I just think the entire market is manipulatable at the moment. So whatever you use, I think you're still going to fall prey to this larger issue here. And then the second larger issue that he points out is the index automatically lists the assets traded on Coinbase and excludes anything not traded on Coinbase. That's true, although in the long run, hopefully this won't be an issue. Hopefully we get to a point where the market is mature enough that we have multiple of these indexes, and not just obviously the Coinbase Index Fund. Just like there are, index funds that are based off the S&P 500, based off of NASDAQ, etc. In the long run, obviously, we'll get to a point, I think, where there will be multiple index funds. There will be a Binance Index Fund. I'm sure that's coming. Mark my words. I know nothing about it, conclusively, but if I was to put my money on it, And just based off of Binance's history and their willingness to progress, I definitely think we're going to be seeing a Binance Index Fund at some point. And then he concludes with, over time, it should be fine. You know, yeah, that's what I think too. I mean, there are going to be kinks in anything that's in its infancy. So I agree with this. Over time, it should be fine. And I think that it will actually be great for the market to acquire more investors. As we said, the Coinbase Index Fund currently is only open to accredited investors, and the minimum investment, as you see here, is $10,000. And in order to be accredited as an institution, you have to have 5 million in assets. As an individual, you have to have 1 million in assets. So we're dealing with people that have large amounts of money that might be scared to trade in individual assets. All right, guys, that's it for the video. Hope you guys enjoyed it. Hope you enjoyed the content. Go ahead and subscribe to the channel, hit that notification bell, join the Discord, it's 100% free, join the Patreon for the trade alerts and weekly report. Stay safe out there. Peace.